welcome to Money, 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 your weekly personal finance date with me, Surabhi Upadhyay. Do you have assets or income that you have perhaps not disclosed? Are you wondering if participating in the government's income declaration scheme is a good idea? Are you confused about the disclosure process and wondering what happens once you actually come clean? Well, if the answer to the above questions is yes, then stay glued to your seat for the next half hour because a very, very special guest joins us on Money, Money, Money this week. Principal Chief Commissioner of Income Tax Mumbai, D.S.Saksena. He is literally the top tax boss of Mumbai and he's here to clear the air on the income declaration scheme 2016 and he's here to tell us exactly how it works. Sir, it's a great pleasure and an honor to have you here in the studios. Thank you for taking out the time. For the benefit of all those who are watching who want to know a little more about IDS, and also joining me, of course, is personal finance expert Harshvardhan Roongta. Harsh, you will bring in the kind of queries and questions that are circulating in the market, what people really want to know before they take the plunge and go in for the IDS. So I'll start with this very basic question, Mr. Saksena. We have had income disclosure schemes, voluntary disclosure schemes in the past, and now in 2016 comes the IDS. What is IDS all about and how is it different from the previous schemes?
IDS is different from previous schemes because firstly, it is not a voluntary disclosure scheme. Secondly, the main aim of the IDS is not to garner money. It is for a greater purpose, because if you have heard our Prime Minister Narendra Modi in Mann Ki Baat and on some other forums, what he is saying is that you should come clean because our economy is now almost a developed economy, and so we should all have clean balance sheets so that we can progress in our trade, business.
So the scheme opened out on the 1st of June this year. It's on till the 30th of September. How do you gauge the feedback and the response so far?
Response has been very encouraging. There have been disclosures and there have been many queries. I think that many people are waiting and they are trying to sort of evaluate in what way they can get benefit out of this.
So are you expecting a big rush as we get into September now?
I think so, probably.
So, you know, sir, the big question that really comes in and the queries that float around, the one big concern on people's mind before they take the plunge is, will there be a witch hunt? What will happen? Will I, you know, if I'm disclosing under IDS, will I come under some kind of a tax blacklist, which means very frequent assessment queries, very frequent notices coming my way, even in subsequent assessment years?
No, that fear is unfounded because the information given under this scheme is strictly confidential. It is limited only to the Principal Commissioner of Income Tax, who doesn't have anything to do with assessment. It will all be kept under lock and key under his supervision, and details won't get out, not to other departments and not to our department also.
Well, Harsh, let me bring you in here as well, because you know you were saying earlier that there are questions in the market as to what happens if maybe the income tax department is of course not going to be giving out these details, but you know perhaps other enforcement agencies. What are the concerns that people really have?
Yeah, so in fact, Surabhi, because we've been conducting so many awareness programs about the IDS, so we've got so many anonymous queries where people have specific requirements and they have apprehensions before disclosing. So, sir, you know, there was one specific query which was very interesting. So this is a person who says that he's been undertaking trading activities. So he's into buying and selling of goods, and which he started a couple of years ago with undisclosed income. So the capital was basically he bought goods and he's buying and selling those goods. So the question is, now he wants to come clean. So is there, besides the 45% tax which is paid on the capital and the profits earned on that trading activity, is there going to be any sales tax or VAT liability additional to this income tax?
Actually, it is income declaration scheme, and the immunity you get is only with reference to the Income Tax Act. VAT and sales tax are separate, so their liability also will arise.
The immunity is only with respect to the Income Tax Act. Any other act, if you sort of have erred under any other law, I suppose you'll just have to deal with those consequences.
Absolutely. So on this category, we are very clear. The declaration is only, and immunity is provided only for income. Any other liability that may arise, the department, Income Tax Department is not going to share the information. However, if there is any prosecution under any other law, then there is no immunity that can be provided.
Absolutely.
No, but let me tell you one thing. it depends upon the form of your declaration, because suppose you will have to bring that amount of money in your balance sheet and in your, which may be open to inspection by the sales tax department. Suppose you don't show it as sales, you show it as pure other income, then probably there won't be any sales tax liability.
So it entirely depends on the nature of disclosure, and then of course the conversations that you have with the other enforcement agency or the other tax department. Sir, just coming back now to the basics. So what all needs to be declared under IDS? What type of assets, what type of income are we talking about?
All those income and assets which you have not disclosed earlier.
So I just want to delve a little deeper into that facet, because as I go through the scheme rules, which is on the income tax website, it's very clear whether it's bullion, jewelry, precious stones, whether we're talking about art, archaeological collections, drawing, paintings, all of this has to be disclosed. And how is the valuation then going, the independent valuation going to be done, and at what value will the tax be levied?
Actually, we have registered valuers for all kinds of assets. So you go to that registered valuer, he'll value the asset for you. So
the tax has to be paid on the current market value, or would it have to be paid at the cost of purchase?
Current market value or the cost of purchase, whichever is higher.
So the taxman is going to ask you to pay the higher of the two. There's no escaping, no getting away from that. All right, gentlemen.
No, but there won't be any inquiry. Like you would say that the value of this house is 2 crores. We'll take you at your word. We won't question the valuation which has been made.
Okay, all right, fair enough. We'll take a break on that note, but lots of other questions, including the link between the income declaration scheme and the Benami Transactions Prohibition Act. What's the link? What is it that you need to keep in mind after the break? Welcome back. Here with Money, and this week we are discussing the income declaration scheme with the Principal Chief Commissioner of Income Tax, Mumbai. So we've gone through the basics of what all sort of assets and income needs to be disclosed. Now a question comes on inheritance. What if I'm sitting on an asset which I have not bought or acquired, but I have inherited? I have not disclosed it. Now, does that fall under the purview of IDS?
No, it does not, because there is no tax on inheritance. So we won't inquire into how your forefathers acquired the asset, but that should have been some time ago, not suppose 1 or 2 years ago, say more than 6 years ago, you inherited some asset and it had been acquired earlier, then there's no question of it coming under IDS.
Oh, so this is very important. Inherited assets are not under IDS or not under the purview only if they have been inherited at least 6 years prior. If you've inherited any jewelry or movable or immovable asset in the last few years, then how do you go about assessing the tax liability?
Suppose you have inherited something 2 years ago and you are aware that whoever you have inherited it from had not disclosed it, then you will have to disclose it.
Okay, so if the inherited asset was not disclosed at the original time itself, when it was acquired, then the liability falls on you, the inheritor, to disclose it. Okay, that actually brings me to the next leg of this conversation. And Mr. Saksena, we want real clarity on this. The Benami Transactions Prohibition Act is obviously a fairly stringent piece of legislation. It's a strong law, right?
Almost draconian, you can say.
Almost draconian in your words. I believe, of course, you can also be jailed along with the penalties and the fines. What's the link between someone who's declaring under IDS and, would he still be, because you said the immunity is only with respect to the IT Act. Can he or she still be prosecuted under the Benami Act?
No, the immunity extends to the Wealth Tax Act and the Benami Transactions Prohibition Act also.
So do explain this to us. How does it work?
I'll explain it. Firstly, what is Benami? Benami is something which you are holding in your name, but you have not paid for it. So the real owner is say X, but you are the person who is holding it. So X has paid the money. So X is now hit by the Benami Transaction Prohibition Act because he has acquired property in someone else's name. Now X, if he declares the property and gets it under IDS and gets it transferred in his own name, then he will not be covered by the Benami Transaction Prohibition Act. He'll get out of it.
So Harsh, that could be actually a huge immunity, right? Because some of the stringent conditions and the kind of sort of restrictions imposed by this act, as sir is saying, are fairly draconian.
Now, if you see the penal provisions, the penal provisions are actually very draconian in that context. So, whoever enters into Benami transactions shall be punishable with imprisonment from 1 to 7 years, and there is a fine. It's not an or. The earlier version had an or, so it could be imprisonment or fine.
Now that
now it has been changed, and that is why I said sir was very kind enough in not explaining the details. But however, if you go into the details, it says the punishment is imprisonment from 1 to 7 years, and there is a fine up to 25% of the fair market value of the Benami property.
Plus, I think the property can be simply
confiscated
by the government of India, right? You have no right on it. You've anyway not registered it in your name. You haven't paid tax on it. Get ready to lose it and get ready to go to jail. That's, I guess, in substance.
Absolutely, and there is a penalty also for giving false information. So not that if you've just been identified, even if you give false information, there is a punishment, and there's a rigorous imprisonment of 6 months and going up to 5 years, and fine up to 10% of property value, besides obviously the government confiscating the property.
So if there is something Benami that you or anyone you know has done, it might just be a much better idea to look at IDS, and then you get immunity from a lot of these very, very stringent provisions of the Benami Transactions Prohibition Act. That brings me to the question on IDS itself. You get to pay 45% tax and you disclose the income that you've not disclosed previously. What happens after the 30th September deadline? If someone chooses not to come forward for whatever reasons, then what happens?
Then the entire Income Tax Act is open to him. He can be, assessment can be made, then penalty can be levied, and he can be prosecuted also.
So the reason I'm asking is that, obviously when this debate is out there in the public, one always hears two sides. Is 45% taxation too prohibitory? Is it too high? Had it been lower, maybe more people would have come forth. So how do the numbers work? If you don't declare under IDS and you fall under the provisions of the regular Income Tax Act, then how does the mathematics work?
Maths is against, because tax would be around 34%.
Basic income tax that we levy.
Then 34% would be the penalty. Plus the interest, it may work out to something near about 80%.
Oh wow, so you might be paying 80%, and then of course you've not disclosed, so the other things that kind of come with it.
And there is a prosecution in addition to the 80% that sir has just mentioned. So, so when you're looking at a liability of about 80% plus prosecution, you have a 45% tax and immunity from any other further.
So 45% tax with immunity from prosecution, or 80% tax along with prosecution. The choice is yours. We'll take a break on that note. A couple of questions on the IDS and some of the finer points when we come back. Welcome back. Here with Money, and this week we are in conversation with the Principal Chief Commissioner of Income Tax, Mumbai, to understand the income declaration scheme. Sir, so now that we've gone over some of the major provisions, I just want Harsh to bring up some of the queries that you've been getting in these seminars, which are awareness seminars on IDS. What is it that people really want to know? Where's the confusion?
Yeah, so sir, there were a couple of queries, as we mentioned, just putting in different brackets. So there was one query where a person said in the year 2014, a person introduced capital in his partnership firm by simply way of going and depositing cash into his bank account. There was some requirement for capital in the partnership firm without any knowledge. The person goes ahead and deposits cash into his bank account. The case is currently under regular scrutiny, and it is under scrutiny before the assessing officer. So, however, this particular deposit of cash has not come into the knowledge of the income tax assessing officer right now. So he fears that in case the point is raised he would not have a sufficient answer to give. So then there would be penal provisions and all those things. So he's considering to declare this particular income under IDS. So sir, can he do that and get immunity from this kind of prosecutions, penalty and interest?
No, he cannot, because if an assessment is in progress and a notice has been issued, he cannot come under the IDS.
That's an important clarification. So in cases where an assessment process is already underway and there is a notice or there is an inquiry that's already been raised by the department, then in such cases those people cannot come and seek immunity under IDS.
For that particular year, suppose notice is issued for 15-16, you can still declare in 14-15 or other years.
Okay, so the assessment here will definitely matter in these cases. Harsh, any other questions?
Yes, so we had another category which was from a public charitable trust. So sir, this is very common practice where a public charitable trust owns some piece of land or a temple property which is going on since a couple of decades now. So they have acquired such a property, and as we are aware, the IDS requires the tax to be paid on current market value. So the current market value, for example, is about 1 crore rupees. So the public charitable trust is liable to pay 45 lakhs as tax if they come forward and disclose that particular property. So, and at the same time, sir, a public charitable trust also has a mandate to distribute, to spend 85% of the gross receipts, which they have to spend every year. So, if a public charitable trust comes forward and pays 45 lakhs, will this 45 lakhs form a part of the 85% of the distribution that they have to do of their gross receipts?
No, it won't, because 45 lakhs is not paid for any charitable purpose. It is tax.
Oh,
and that's going to the government of India. Charity has to be separate and beyond then, I guess.
So because, the concern was because then, if every year they have anyways distributed and spent 85% of the gross receipts, the trust is not left with much money at the end of it. So paying 45 lakhs additionally now, out of some old reserves may become a concern. But I guess, as you're saying, there is no other option.
Yeah, and dates are now staggered. The trust has the option to pay till 30th of September 2017.
So I just want to comment on this, on the staggered payment bit as well. If you could just run us through the milestones. The total tax payout, the total 45% has to be till the 30th of September next year, 2017. But what are the first milestone payments and the second milestone payment?
25% of 45% has to be paid by 30th of November 2016. Then another 25% has to be paid by 31st March 2017.
Okay.
And the balance 50% has to be paid by 30th of September 2017.
And now whether you paid through your some other reserves or you paid through whatever sources or you liquidated an asset, obviously the tax department is not concerned, but you need to pay as per these milestones. All right, Harsh.
Yeah, so sir, one additional query we have, relating to agricultural land. So again, it is known that if you're owning an agricultural land, the sale of an agricultural land and any gains made out of the sale of agricultural land is tax exempt. So if there is an individual who's acquired an agricultural land a few decades ago and considers, to declare under IDS, one common question which is in the minds, in case I go ahead and sell my agricultural land, it's anyways tax exempt. So if I make a declaration today, I will have to pay 45% tax. So in case of a sale of an asset which is without any tax implication, the reporting norms are generally easier. So should a person of this category also consider declaring under IDS, or simply he can sleep well?
It would be beneficial for him, because when he sells, the tax department may ask him how he acquired that agricultural land. So he'll have to explain that acquisition.
So while the sale of an agricultural land is tax exempt, the source of the funds for acquiring the agricultural land would also be questioned. So.
Okay. So the source of funds in that case becomes relevant.
Yeah.
Okay, so as we wind down the conversation, sir, I'll ask you a simple question, and hand on heart, please do answer. You mentioned that IDS gives you immunity from the existing provisions of the Income Tax Act, not any other law in the country. So does it mean that if you are coming under IDS, while you get immunity under the IT Act, you are opening yourself to the possibility of prosecution, questioning, perhaps certain other issues being raised by other enforcement agencies?
No, actually, you get immunity under the Income Tax Act, Wealth Tax Act and the Benami Transaction Prohibition Act.
Right.
Plus, we are not passing on your information to to any other agency, including any other functionary in our own department. So if you declare some pure income which is not liable to be questioned by any other enforcement agency, then you are through.
So, and barring the case of the agricultural land, as we discussed, you're not asking about the source of those funds or the source of that income?
No. What he meant was that suppose you have an undeclared asset, maybe it's agricultural land, maybe it is some urban property, then if you sell it, when you sell it, then the department may ask you how you acquired it. So it may be better that if you have some undisclosed asset with you, you declare it today.
Okay, but as you explained earlier as well, you're not bothered about the source of funds, the source of that income, as long as one person comes forward, declares it and pays 45% tax. Right. Okay, so Harsh, for the benefit of our viewers, if you could just recap the whole process, how does one go about, which forms to apply, and how do you ensure that you get that certificate saying that you've come clean under IDS?
Well, in fact, the department and the government has made it extremely simple. It's a 4-step process, very simple to understand. Form number 1 is when an assessee comes forward and declares the kind of income that he wants to come clean with. So there is a form which needs to be filled in with the amount that you wish to declare under IDS.
Sure.
Along with it, if there is an immovable property or an asset requires valuation, then there are appointed valuers, registered valuation. So you have to attach a valuation certificate along with that.
Okay.
Then the form number 2 is what the department, the income tax department, will write back to the individual saying and calculating the exact tax that has to be paid.
Okay.
So form number 2 is a communication which basically just enumerates the amount of tax that you need to pay.
Okay, it comes from the department to the individual.
Absolutely. So that's kind of a confirmation that the form number 1 has been received and your tax liability has been ascertained and the X amount has to be paid.
Sure.
Now, form number 3 is when the assessee actually pays the income tax and attaches a proof of payment and submits back to the department. So this is a proof of the payment being made. Form number 4 is when the department again acknowledges that payment and then is basically a certificate in your hand saying that now you are immune. You've got the immunity from any of the prosecutions under the income tax, wealth tax or the Benami Transaction Prohibitions Act. So it's a simple 4-step process, very non-intrusive in that nature. It's an opportunity, as Sir has mentioned and Mr. Modi has even spoken. It's an opportunity for an individual to come ahead and actually pay that kind of tax and come clean and buy peace of mind. So this, I believe, has been the intent and the process has been simplified to keep in line with the intent.
Well, Mr. Saksena, thank you so much for coming in and explaining all the provisions of the IDS to us, and we hope that people have some takeaways from the show as well and can come clean and get that much needed peace of mind. Harsh, thanks so much for joining in with all the viewer queries as well. That's where we take you leave on this week's edition of Money, Money, Money. Your feedback, questions and queries are welcome as always. We'll see you again next week.